Hi, good morning, everyone. So it's very happy to see people coming on this Saturday to join us and listen to our experts what and where to invest in 2025. It's a very good morning, and we have a lineup here from our investment team. And this umbrella is made up of three different experts. So we have Sherman from our investment consultant team, and we have Paul from portfolio team, and also Alvin from our research team. So today is a very good opportunity where we can hear different perspectives when it comes to investing in 2025. So let us start right up with a poll questions. So here, if you look at our slide, we have this polling whereby you can actually vote for some questions that we actually put up. All right, so while waiting, perhaps we can just ask our experts, what do you feel about 2024? Let us have Sherman to take on this.
Sorry?
What do you feel about 2024?
What do I feel about 2024? So we're looking back right now. Okay. 2024 is really about defying plenty of expectations. I think for those who attended last year, you have heard from my colleague Kevin to tell you about how solid we are when it comes to views about rate cuts. 12 months ago, when we are sitting here in this hall, we heard from Jeremy Powell with regards to US about rate cutting. Everyone thought it's going to be 6 times cuts. But we at FSMOne, we're telling you that probably there's going to be no cut or much lesser cut because we don't think inflation is going to be this easy to be tamed with. So what happened 12 months later to today as you speak? Federal Reserve has delivered cuts, but of course much lesser. But markets has been feeling excited because even though you don't have rate cuts, but AI stocks, semi-cons continue to do well. You have post-election rallying that deregulation in the banking sectors in US has been boosting the appetite. So there's plenty of, I would say, excitement news coming up. And earnings has been proven to be very, very, I would say, resilient. US is not cheap, we will say it this way, but we always say that even if it is expensive, it could be way more expensive in the future. So that's 2024 to me. But of course, China was a surprise. You see, you do manage to, you can tell in September and October where China announced historic measures to boost up the market. It did not last too long, but eventually market has been waiting for this for some time. So 2024 is more about a year of market trying to figure out how long US rally can sustain. And I believe that will be the continuous question to be asked in 2025. Yeah.
Okay, I see that generally 2024 is generally an eventful year. If you join us and participate in this 2024 investment journey, you could have already recalled that a lot of markets actually make double-digit returns. Perhaps let us hear from Paul. Generally, how would you evaluate your portfolio last year? What key actions have been taken to actually help the portfolio gain more in 2024?
Right, thanks. So you guys have seen our performance, our recommendation. We have been more right than wrong from our research team. And basically all these ideas are implemented in our portfolio. So to us is that it's a given. It's a very good year for us, but deep down is that we want investors to make money. Even though we are right, but if investors don't make money, don't follow, that is actually still not a good thing. I still won't feel happy about it, right? But the good thing is that we have managed to convince a lot of investors to invest in managed portfolios, to follow our views, follow our recommendation, our funds. And that actually made not just me, us, everyone is very happy about it, right? So to see clients, when you meet clients, you see happy, smiling face, that is very good feelings, right? So I think I just want to take a step back is that I joined the team during the market low 2022. And what's the reason I joined the team is that the portfolio team, which is, I thought back then it was the easiest way to help a lot of investors, right? Instead of me meeting investors like one by one and telling you that, hey, you are too exposed to this area, you should actually shift more money into the other areas. That's really very time consuming. I only got 24 hours a day, right? 7 days a week. I can't, and managed portfolio is the easiest way to help everybody, right? The most people. And also not just you, everyone here, but you might have your family members, your friends who actually needed help, but you don't have time. You have your family to take care, right? And you have your job. So what you can do also to refer to your family and friends that needed help and come look for us, right? So our job is to make sure that more people are, happier, invest in area that really can benefit your life and also your bank account, of course. Yeah.
So definitely, it actually echo what Jerry has just mentioned in his presentation just now. Leverage is the key, and we do have the resources here from, let's say, Paul from the portfolio team to actually facilitate and smooth out the investment journey for everyone. So perhaps when it comes to 2025 moving forward, so let us have Alvin to tackle this question. What likely could be the biggest surprise to you?
You mean in 2025?
2025.
Yeah, I think the biggest surprise that might happen in 2025 is that given that, especially if you think S&P 500 has performed pretty well, very, very well in the past. 2023, the return is like 26%. And then 2024, you have around 23%. So after 2 years of double-digit returns, the first question that might come to your mind is, can we sustain this rally into 2025? And as you can see from the outlook just now, definitely our view is that we can sustain in this rally into 2025. But the main question that we are facing here today in this year compared to last year and the previous year is that the valuations are not cheap. Things are not cheap compared to past 2 years. So the real question is, what can really bring the markets up or down? So that's the biggest surprise that might in store for clients or for investors, for us in 2025. So that's what I think. Yeah.
Looks like 2025 is going to be an interesting year, and I believe that most of you already capture what are our bullish call being shared just now, and what can you expect throughout the journey. So I believe that a lot of you have already participated in the polling. For those of you who are keen to participate in this as well, you may refer to a TV on your side, and you may scan the QR code to participate in this polling. So currently, we have quite a number of you actually vote for what was your portfolio return in 2024. So perhaps we give some time for everyone to actually answer this. So while buying some time, perhaps we get Sherman to share a little bit. What do you think would be the general vibe that investor is going to feel for 2025? Especially perhaps you can mention a few markets that are you quite bullish on?
I think if we were to look into the sentiment of the global investors, to put it this way, where will they be looking at? I think the answer is pretty straightforward. It's got to be US still. Because if I ask everyone here to name a few names of a few stocks that have done pretty well last year, I would say 10 or 11 out of 10 of them is going to be US, from the US markets. I think, I mean, as everyone has been pouring in as in what are the ideas that they're looking at, it's all about what the investors are hoping to make instead of strategies. So it's good that we reframe this question as in, like, instead of what is everyone is hoping at, basically what can the market delivers to you eventually. Now, in my perspective, this is going to be a very volatile year. But don't be afraid of volatility, because volatility eventually will help you to secure plenty of entry points. Today, if I tell you US is going all the way up, your question is going to be like, Sherman, when can I start buying? Because everyone wants to buy at a cheaper price. You need volatility. Volatility gives you entry points. And so you have Trump in White House right now, and basically international trade policies at its stick, where everyone is trying to figure out what Trump is going to do. So there are plenty of guessing. When you have plenty of guessings, right, that simply means that some of y'all would make the correct prediction, some of y'all will make the wrong predictions about what Trump is going to do next. When things doesn't happen based on your expectations, right, that's where volatility comes. So if I were to look into this, you can tell generally the market vibe is that it's going to be US exceptionalism. But of course, beyond US, do we see opportunities elsewhere? There are. For example, you have Japan, which is doing pretty well with their corporate reforms. You see earnings picking up. Other than Japan's, you have Malaysia, like what Kevin has mentioned earlier. The Three Sisters, you have Iskandar area in Johor Bahru. You have Sarawak, you have Penang, where Malaysia wants to upgrade itself to be from downstream to midstream supply chain when it comes to semiconductors or E&E sectors. So that's what the general key things is going to be materializing in 2025, and that is fitting into our house view, to put it this way. Yeah.
So like Sherman mentioned a lot of like key markets that have you heard right now from US, Japan to Malaysia, and what are the reasons behind the bullishness. So perhaps shift our attention to the poll result. We see that most of our the people in this hall today actually achieve a positive return of 5 to 10% range. And most of them fall within this range. And congratulations to those who actually achieve double-digit return, as well as over 20 over percent return. Perhaps most of your gains coming from the tech rally, or perhaps it comes from Asian equity pickup as Fed actually initiates an easier policy. Perhaps we get Paul to actually comment a little bit on this result. How do you feel? Do you think it's a good start for 2025, and how does it reflect in your portfolio strategy this year?
Yeah, I'm actually very eager to comment on these results. And my focus here is not on those people who can do more than 20%. And if you're doing more than 20%, you're probably in the wrong hole also, because you're doing pretty well, right? So if you're even doing more than 50%, you should be staying at home, right? My focus today is actually to focus on people who are having negative returns, 0 to 5% return. This is unacceptable, right? So, and this is a lot of people. It's like 25% of the, let's say everybody voted, 25% of the room. It might be the whole Malaysia as well, right? So it's not easy to deal with you guys. One key thing that I need to mention is that there's a need to have a mindset shift, right? That's the reason why you are not performing so well, right? So it's not about our recommendation. It's not about anyone else. It's you yourself, right? You need to be very open to listen, to analyze, and to really think about what have gone wrong for in terms of thinking process, right? Because this is very important. We are not just talking about 2024. We're talking about next 10 years, next 20 years, your kids, your grandkids. They need to be able to get good advice from you, right? So you have a job to really figure out this financial planning, this whole thing, and to pass down to your kids and your grandkids, right? So 25% of you. And yep, I think that's it.
All right, so thank you, Paul. I believe you have the answers in mind for those who are being those who achieve a single-digit return, and this is okay. And I believe that for 2025, there are more pockets of opportunities out there, and if you properly design your portfolio strategy and follow the course that is being made by investment research team, you should be on the right track.
Maybe I just add on some few pointers. Over the past few years, it has been a tough journey. So if you have met me over the past 2 years, maybe I would have been able to change your mind. And let me just share some examples. I do have various clients. First example is that a client who is very successful is like up north, more than 50 million net worth. So very heavy in China 1-2 years ago. So what happened was that we speak few hours, right? So at the end of it, you know what the client says? Here's my trading account. Can you help me sell my China exposure? It's very heartache for me to sell it. It's very painful. The conclusion here is that even knowledgeable people, even very wealthy people, they also get it wrong, right? So what you need is to really come to our events like this, like listen to all the fund houses, us, our advice. This is only one example. Another example is that the reason why you have negative returns is mainly because of wrong investment, right? I do have clients that, you know, some of them very religious. They say that I don't think it's good that you recommend Islamic fund because you are I'm a Christian, right? So then I was thinking that I'm not talking about religion, right? I'm talking about performance. I'm talking about returns. It has nothing to do with my religion. And it so happened that in our portfolio, there's one fund that is Islamic fund, and the fund manager is super good, right? So what do we do? We were thinking very hard about it as well, whether to get into Islamic fund, right? So the end conclusion is that performance is performance, right? So because we are in investment line, we are not in, we're not talking about other things, right? So that mindset needs to be instilled in everyone's mind because you are investing, right? Investing is about what? Making money, right? So that's key thing. Another point is that something that is very unfortunately in Malaysia, right? 2 years ago, a lot of people hate US for whatever reason. I'm like, whether you hate this country or that country, it doesn't matter. Ultimately, it's performance, where we can make money, right? So that is where, if you invest in managed portfolio, that's where we help you to readjust and we help you to position without you actually needing to pull the trigger, right? So 2 years ago, like Jerry mentioned, we actually had China exposure, but then we actually reduced and actually we exited. It's only recently this month we entered a bit of China, right? So 2 years ago, did we take losses on China? Yes, we did, but we make much more from other area, US, tech, semicon exposure. So these are the things that we will be very happy to do for you, right? So, yeah.
So from Paul's explanation just now, you do see a lot of value added components from the portfolio team, not just their expertise in to navigate these volatilities in the investment landscape, especially with Trump 2.0 back into the White House and China being back on our radar. I think these are the two most focal point for investor in 2025. And let's hear from Elwin. What's your response to the poll result that we just put up for our clients? And here you go. For those who keen to participate, you may vote for your favorite asset class for this year. The options available are equities, gold, fixed income, and REITs. And looks like equity is taking a strong lead. Perhaps, Elwin, you may be ready to answer, like, do you agree with this result on your personal view? And what is your outlook for your favorite asset class this year?
I think let's start with what I'm seeing here today. I'm not surprised by the results that equity make a big lead and then you see fixed income lagging behind. It's somehow like a society gaze whereby people are always going for equities. It's always about stock prices, and rarely does people care about something as boring as bonds or even as complex as the 10-year bond yield. But it doesn't change the fact that, let's say, the US 10-year bond yield is one of the most important financial metrics in the entire financial world. It doesn't just impact the cost of your borrowing cost of your world largest borrower, which is US in this case, and it's also whose currency is also the world reserve currency, and then also has far much more implication on equity prices. So what I want to say here is that don't just limit yourself. Don't just say no to bonds, but just if you have the chance, learn about it. It helps you to like broaden your investment horizon to not just like including fixed income, but also deeper into equities. So for your question as to which asset class we prefer entering into 2024, I think it's more of a 50-50 basis. We have been more optimistic on equities. We have turned more optimistic, just that it's now somehow on par with what our feeling is to the fixed income. Because why? Because just like I mentioned, the key thing that is entering into 2025 is that things are not cheap. Valuation are stretched, but just that that means valuation are stretched doesn't mean that there's sure or a huge sell-off will be happening, like equities will record negative return. No, but it's just that we will expect more volatility this year, and with more volatility, the bonds are fixed income will really helps to make it in your portfolio to be as like an anchor to reduce some of those volatility inside your portfolio. Yeah.
Perhaps you can elaborate a little bit more on perhaps focus on research focus for bond fixed income this year. Generally, in what segment and what kind of bonds that you actually recommend?
Yeah, I mean, for fixed income, right, we currently prefer short duration bonds over the longer duration bonds. Because why? Because we think that the team that is going first of it, the shorter duration and longer duration, they are both different yields. And when looking at the attractive of this yield, we think that currently the longer duration bond, the yields are not enough to really compensate investors for taking on the additional risk premiums for going into the extra duration. We think that bond yields, for especially for the longer ones, might rise further. Might have still some upside potential. That means downside risk for bond prices until we think that somehow likely in the throughout the year, once things have been stabilized, then we might turn a little bit more positive on the longer duration bonds. But currently, we prefer the shorter duration one, and we prefer investment grade bonds. That means your corporate bonds that is very high quality compared to those higher yields bond. Because I know higher yield bond is giving you very very nice attractive yields, but then there's still risk applies to these companies, these bonds, especially because we think that the terminal rate for Fed, especially that is the US Fed is expected to only cut rates by around 2 times this year. So with that's the case, right? Interest rate is expected to be above 3%, and this above 3% level is still create pressure for a lot of those companies who has especially experienced whose balance sheet is not that healthy, who is in the high yield space. So we think that investment grade bonds is much more safer, and then also we prefer the shorter duration bonds at this current standpoint.
Well, thank you, Alvin. Looks like Alvin has given us a very comprehensive overview of the bond nature itself and also how attractive equities could be for this year. So perhaps to get Sherman to actually answer and to share with us your experience with the client on a day-to-day basis, what are the feeling for this year, are the performance for this year asset class? Perhaps you can share a little bit more on risk or fixed income perspective.
You always give me the toughest questions to answer.
Because I believe you can tackle it well.
Now, looking at the numbers, I think my fixed income team has an uphill battle to climb later on to convince people why fixed income deserve a spot in the portfolios. Now, my boss is sitting down there. I'm looking at these numbers. I think he'll be very, very happy to see everyone thinks that equities can do better this year. That generally tells you basically market is feeling pretty good about this year. And you have madman in White House. The name is called Donald J. Trump. People call him madman, but to me, he's a very smart businessman. Tried to think 2 months ago, or even 3 months ago, before the election, who would have thought there will be a ceasefire in Gaza so soon? And this deal has been struck even before he is in the office. Basically, you can see the way he does things. It's out of your expectations, but he gets things done. But markets are not too sure about what's going to happen. Would Greenland, Iceland become another state of US? Will Canada become the 51st state of US? That's plenty of volatility. But I think fixed income comes into a play whereby today we are looking at all into equities. Well, have you asked ourselves, what is your plan if market today correct 10% next Monday? What if? Today, if you have plenty of bond exposure within your portfolios, you will be better off because you will know you know that there's a safety net in your portfolios. No matter how volatile the market is, right? Your portfolio is somehow insulated. That's how bonds or fixed income comes into play. You voted REITs, you voted gold, some of you. Gold was the second, right? That also means that people are aware of what could be coming in 2025. So you need protections, you need insulations from volatility, and look back the past behaviors on different asset classes. Is Trump always good for equity markets? Not all the time. He was elected back then. He did his first term that was on 2016 election. So his term was 2017 all the way to 2021 before Biden comes in. 2017 was a pretty good year for equities markets. But what happened to 2018? You had trade war, and that impacted global investor sentiment. And that was the time where investors were hoping, oh, I should have diversified. I should have buy more, probably India. India was the best market in 2018 and ASEAN countries. They would have hope like, hey, I should have gotten more into fixed income because at the times of volatility, when you are squatting and waiting for market entry points, you want to get paid. So there are a few ways to get paid. Now, one is dividend stocks or REITs or those income payers or dividend payers. Secondly, I think the easiest way is going to be fixed income. Because you know there's one thing that you cannot get from equities market this year, which is called certainty. You know when you'll be getting paid, and you know that when you're getting when you got paid, that is where you have cash flows to go in and hunt for opportunities in the market. That's how I'll put it. Yeah.
Well, that's a very detailed explanation from our IC Sherman. So generally, his view is that while putting up your portfolio, not forgetting fixed income importance as well, which could serve as a cushion and could be more defensive this year when it comes to tackling different kinds of volatilities throughout the market. Perhaps shifting our attention to the third poll that we have. So the result will be revealed very soon. Please quickly participate in voting for the market that you are likely to invest most of your money in 2025. There are a lot of options up there. US, tech, the very common and popular topic for this year. Also, we have our developed market from Europe and Japan, from China being a dark horse, and Malaysia and India. So let us review the result. All right, I think we'll be up shortly. Looks like technology still garner the most attention. Perhaps we have Paul to share with us how is your asset allocation for your portfolio this year? And does the poll result actually resonate how you actually handle your portfolio allocation this year?
Hello. Like Jerry mentioned, right, we have quite sizable exposure in tech, either through our US exposure or through our ETF or dedicated technology segment, right? So it's a very special segment that we have in our portfolio. And I think if comparing to the poll is that if this is your portfolio, is a bit too concentrated in tech, right? So that's the one thing I can see. So, but all in all, top three is areas that we like: technology, US, Malaysia. And China, we just added a very small position. It's not big. They're not going big on China. We are still very big on tech, US, Malaysia, Japan as well, actually, right? So I think even within tech, there are a lot of segments, right? And recently, 2 years ago, we were big on, we were very positive on semicons, the hardware side. And lately, when we increase tech, we actually increase on the software side, right? So it's through ETF, right? And the reason we use ETF is because I think we think that is actually a better way to get direct exposure, because sometimes we get very frustrated with the tech fund managers, right? They sometimes, like 2 days ago, they were, they had very little semicon exposure. And we actually attended events and we tell them, it's like, we are very positive on semicons. We tell you like the reasons, give you a list of reasons, and they're still very stubborn. So what do we do as a portfolio manager, right? We are managing your money, and we as a FSMOne house views is that we are very positive on semicons. So we ran direct with ETF, right? Clear cut, kind of clear exposure. So, yeah.
Okay, looks like, thank you, Paul. So it looks like actually portfolio strategy is actually evolving over time. So other than fund, we have introduced some other kind of product as well, which also helps to gain better exposure towards selected area, for instance, tech itself and as well as US market. Perhaps at this moment, I believe all of you are familiar with the key investment team and our house call already. Not sure whether you can recall just how Kevin shared that there are 5 things that must be your key takeaways today. But not to forget their tactical position. I think someone perhaps have question in your mind. Japan small cap, and another one with an interesting label, China being a dark horse this year. So let us prompt the question to Elwin. So why did research come up with this label, and what are the things that excite you about China this year?
China here is quite an interesting one, but I don't want to complicate you guys here. So let me put it simple here. For China, right? China is experiencing 3 consecutive years of negative returns, started from 2021. And in 2024, finally, you see a positive year. But if you can recall, if you look deeper inside, closely into last year, the positive year only come in two rallies, in January and in early October. And that's two rallies. And if you invest any other time except for these 2 months, then you may find your portfolio at maybe somehow on par, a little bit, slightly lower return, or even at negative results. Especially for the early October rally. The rally lasted for like 4 to 5 days. I can remember that it was at the peak when the everyone was suddenly so optimistic on China, but then you see how they ended the year. So I would say I will conclude 2024 as a positive year for Chinese equities, but just that for most of the time, the Chinese government has been over-promised and under-delivered in this regards. We have seen his conviction to stimulate, to prop up the consumer confidence, to prop up the equity markets. It's just that a lot of the times he has over-promised and under-delivered in this regard. But why are we still thinking that China has the potential to be the dark horse? Think it at this way. Every time when we wanted to do something, what's the most important step? Is to have the will to do something, right? That's the first step you have to do. You must have is have the will. And Chinese government in 2024, we have seen this conviction. We have not seen in the past few years, but last year happens. The conviction to save the property market, the conviction to save the equity market. So what must happen in 2025, that means in this year, is that first, we need to see real stimulus coming in. We need to see real money putting into the economy, not just all words and no action. We need to see real action. And secondly, we need to see structural reforms to change the entire structural issues that have been engraved inside the Chinese economy. And if these two conditions can be fulfilled in this year, then I believe that we potentially see a more sustainable rally into Chinese equities. That's why we label it as a dark horse.
I see there's a lot of good points.
And another point here, the will to do something is very important, right? So last night, Xi Jinping and Trump, they spoke. So let me just state out what they exactly said, right? So this is what Trump said. I just spoke to Chairman Xi Jinping of China. The call was very good one for both China and US. It is my expectation that we will solve many problems together, and starting immediately. We discussed balancing trade, fentanyl, TikTok, and many other subjects. President Xi and I will do everything possible to make the world more peaceful and safe. Isn't that good enough? Two world biggest economy in the world.
So really, there are a lot of good points over here. So generally, I think the sentiment for China recently has been rather strong, and the earnings as well as the government support in China is tangible, and we see a lot of strong message coming from the top government itself as well. Perhaps at this moment, let us prompt some questions from the floor, where we see that quite a number of you have raised your concerns in the Q&A area. So let us get Sherman to tackle one key topics that we yet to elaborate a little bit more on, which is Malaysia. And this client actually prompted, since Malaysia will be ASEAN Silicon Valley, perhaps he refers to Penang, and which is understandable. However, recent export restriction by US might affect us. What is your view towards this?
I think referring to us seeing ourselves as a ASEAN or the Oriental kind of Silicon Valleys to ourselves, I think that's what the world leaders will need to figure out, because that is basically what Biden has signed on the chip side, to restrict the exports of chips towards. There are three categories, and Malaysia, we are on the second category, to put it this way. Would it be impacting us? The answer is yes, because generally, if you ask on the ground sentiment, for those operators, those who are operating in Penang areas, the sentiment is not as good as what we have read compared to what is posted in Bloomberg or articles. So there's a gap between what the analyst has been looking at, and secondly is what has been the ground is feeling. In order to address that, right, you need two things in place. One is you need, like what like what Paul had just mentioned between Trump and Xi Jinping, can they fork out a better deal so that will be less hostile towards China and the relating partners, because we are at downstream. Being a downstream benefiting countries, we are just looking at the top players and hoping for some spillovers because you're waiting for the others, and we are doing testings, plenty of it. So if the, let me put it this way, if the TICOS will be able to solve it at a higher level, I mean, in Malaysia, we have plenty of things to be able to look forward to. That's one thing. Second thing is that within local space, are there any policies or plans or strategy plans that is available for the local players in order to foster? There are. For the past 2 years, Madani government has been trying to push plenty of agendas, not just Penang. You also have data centers in southern areas, like in Johor Bahru. So eventually, that you're gonna be able to see it as like the policies is very conducive for the local players to upgrade themselves to be mainstream, but that's gonna take time. But what happened to the market is that investors does not want to wait. Investors is losing patience, because you tell me all this story. That's why you see the first half of the Malaysian markets, they are doing pretty well. But the fourth quarter of last year, markets start to get a bit muted because markets wants earnings, markets wants to see real numbers. So that's going to be, even though we are looking at positively at Malaysia markets, but there are challenges for us to overcome. That's for sure. Yeah, and if I were to add on to this, when people can say, hey, Trump is in power, it's going to be bad for China. Not necessarily, yeah. For the first time, China has sent his vice president to the Trump's inauguration. This is the first time China sent some officials to participate this high level of official ceremonies. And at the same time, European markets, their prime ministers or presidents are not attending. So when you are expecting China is going to suffer in 2025, probably that's going to be a bit too underestimating what Trump can do with Xi Jinping. That could be our surprise in this year.
Looks like, thank you, Sherman. So as our panelists today are actually really like Trump policies, and I believe that, I'm not sure about the rest of the two panelists. Are you a believer of Trump policy as well?
I think I'm not too focused on the person. I'm focused more on the mindset, right? Whatever they say, and are they doing it, right? So Trump said he's going to take office next Monday, right? And he said, "Oh hell, loose break." And he said if the Gaza hostages is not being released before he take office, right? So then, what happened was recently, I think just this morning, Israel and Hamas they signed a ceasefire deal, which will start tomorrow, right? Just before he take office. So you can see that it's very volatile. Market and everybody will be thinking that, oh shit, there would be a bigger war, because when Trump take office, right, he said, "Oh hell, break loose." So then, what happened now is that they got the deal, right? Ceasefire, right? And the other thing is on Trump and Xi Jinping. A month ago, 2 months ago, everybody will be talking about, oh, tariff. But what happened this morning, right? It's like they had a call and they said they want to work together very closely. So it's going to be very volatile, but at least the world leaders have the right mindset, right? Right mindset to have world peace. That's very important, right? So like what Alvin said, the will to do something, and what Sherman said, as long as the top have the right mindset, do the right thing, then we all benefit, right? So hopefully that will be the case, yeah.
Looks like everything on above us is actually being cleared and settled down. So perhaps I believe that investor for this year could be less worried about Trump risk, perhaps from the perspective of trades, from the perspective of setting up more retaliation with the other country. Perhaps this could be more like a negotiations power for it to actually maintains its economic status as well in this world. So perhaps we get Alvin to actually tackle one question. What is your view towards perhaps risks, especially when it comes to Fed policy moving forward?
I think that the general view is that REITs will likely to be continue to suffer, especially when yields are expected to be higher for longer. But overall, we think that how do we approach this investment space is that we need to be more selective. First of it, if you're talking about global REITs, right, selective is gonna be there. You need to choose different segments of REITs that is much more safer, that is much more prone to the rise in yields, to the elevated yields. Like industrial yields, the global industrial yields has been doing very well. And then I don't talk about the technical stuff, but just that a lot of you can see in manufacturing, PMI has been slowly recovering across the world. So this has shown that the demand for this manufacturing space, the demand for this industrial space is increasing. So the industrial REITs is one of the play. And then also I would say retail REITs could be one of the play as well, because you can see US consumers is doing very, very well. So that you can see they are continuous spending, retail sales continue to be higher. They are defying expectation that there will be recession happening towards the market. So with this trend expecting to continue, then we think retail REITs will continue to do well as well. And then on the other REITs, more smaller ones such as data center REITs, we think that there is also potential in it, because data center REITs has been very it has done pretty well in 2024, but we expect this trend could continue, because we are seeing more and more companies setting up data centers everywhere in the world, especially for those hyperscalers, your Magnificent Seven companies. They are also have a huge amount of plans to set up to continue to expand their data center capacity. Yep.
So we do see a lot of bright spots as well in the REIT market, whereby not only yield is attractive, you do see a lot of potential in selected REIT asset, for instance, a data center being mentioned here, which is also a rapidly growing industry. Let's to wrap things up for this session, maybe we get Sherman to share with us, since he's dealing with client on a day-to-day basis with and a lot of ground sentiment being collected. What is your best advice for investor in 2025?
Okay, let's rephrase this. In my daily works, plenty of clients will ask me, or financial advisors will ask me, Sherman, when is the best time to invest? Usually my answer will be, I don't have an answer. But today I have an answer. The best timing is always yesterday. It's always yesterday. Because I thought, I should have. The second best timing is today. Second best. Now, one thing that we need to admit to ourselves is that the market does not care about your emotions. You know Trump's, right? Trump does not know you. Don't let them to guide your investments. Don't let market to guide where you go to. But in fact, go back to where you are coming from. What is the purpose of doing investments? For the next 1 year? For the next 5 years? 10 years, 20 years, or 30 years? Don't let market guide you. But in fact, you need experts. You need research analysts, reports to guide you, to help you to figure out. That's one thing. Second thing is that statistics tells us if you were to stay long enough in the markets, if you invest in the US equities since 1930s all the way until today, 90% of the time you are in positive returns. So it's all about spending the time in the market. How much time are you willing to spend? Then let me just wrap things up in this one line. Is that I often tell my clients, the best timing to grow a tree was 20 years ago. The second best time to grow a tree is today. But only if you water it regularly. So we as an investor, we need to ask ourselves, do we have what it takes to water it regularly? If the answer is yes, then congratulations, you're on track. And you replace the tree with portfolios. That will be your investment mantra for this 2025. I hope that will be your takeaway in this year.
That's a great sharing.
Thank you.
So throughout our investment journey, not only the knowledge that is important for us to know where to invest, but controlling our emotion, understanding our behavior well is also a crucial tools for us to navigate the journey in the long term. Perhaps I just share one quote with everyone to wrap things up for today. Perhaps in the investment market, investing in the short term is like a voting machine, but in the long term, it's a weighing machine. I believe this would be the key takeaways for this fireside chat session. And thank you to our experts and for everyone who listened to us today. Thank you.